Hey everyone, welcome back to Corporate Decoder, the place where we break down the secrets hidden in plain sight within corporate filings. Today we have a fascinating report from MicroVision Incorporated, and let me tell you, this one has a bit of a cliffhanger. Stick around to find out what's brewing. Before we dive in, if you love getting these insider looks at how companies really operate, make sure you hit that subscribe button. Also, come join our growing community on Discord. The link is in the description below the video. So what we are looking at today is a Form 8. Think of this as a really important current update. A company has to send to the US Securities and Exchange Commission, the SEC. It is not a regular report like a quarterly or yearly one, but it is for really significant events that could affect investors. Today's report from MicroVision Incorporated is all about a tricky situation they are facing with the stock market itself. MicroVision Incorporated, also known as the company, is in the business of creating advanced technology. They have been around for a while and are publicly traded, meaning their stock can be bought and sold on an exchange. Usually, companies like this want to stay on major exchanges because it makes it easier for investors to trade their stock, and it generally signals stability. Now, this is where things get interesting. The company received a letter from the NASDAQ stock market, which is one of the biggest stock exchanges out there. This letter is basically a warning. The NASDAQ has rules companies have to follow to keep their stock listed and traded on their exchange. One of these rules is about the price of the stock. It needs to stay above a certain minimum level. Here is the problem. For the last 30 business days straight, the price of MicroVision stock, the closing bid price has been below $1. This means for almost 2 months, the stock has been trading at a very low price. The NASDAQ rule requires the stock to maintain a minimum bid price of $1. Because it has not been above that for 30 days in a row, MicroVision is not meeting this particular requirement. But here is the good news, or at least the less bad news. This notification is not an immediate kick off the exchange. It is what they call a notification of deficiency. It means they have a problem, but they are not instantly delisted. The company has a grace period of 180 days, which is about 6 months from the date of this letter, to fix the situation and get their stock price back above that $1 minimum. They are looking at all their options to do this. This does not mean their business operations are affected right now, nor does it change their reporting requirements to the SEC. The company's main stock is their common stock, and it is registered for trading on the NASDAQ stock market. As of this report, the ticker symbol for MicroVision Incorporated is MVIs. Now you know why this is circulating. Being delisted from a major exchange like NASDAQ would make it much harder for investors to buy and sell MVI shares, and could really hurt the company's reputation and ability to raise money in the future. MicroVision Incorporated is incorporated in Delaware, a state known for its business-friendly laws. This is standard for many companies. This number is the commission file number for the company, which is like their unique identifier with the SEC. And this is the IRS employer identification number, which is basically their tax ID number. These are important administrative details, but not really the heart of the current story. While there are no specific financial tables to deep dive into in this particular 8K filing, the core issue revolves around the stock price and its compliance with NASDAQ listing rules. If this were a financial report, we would be looking at revenue, profits, and cash flow, but here the focus is purely on market listing requirements. Imagine you own a popular shop and the market where you sell your goods says your items are not selling for enough to be on display anymore. You have a limited time to prove you can sell them at a higher price, or they will be moved to a less visible location. That is essentially what MicroVision is facing. So what is my take on this? MicroVision is in a challenging spot. The fact that their stock has been below $1 for 30 consecutive days suggests investors are not feeling very optimistic about the company's current valuation or its future prospects. While they have 180 days to rectify this, it is not a simple fix. They might try to implement strategies to boost the stock price, such as announcing positive news about their technology or business developments, or potentially even considering a reverse stock split, though that can sometimes be viewed negatively by investors. The main risk here is delisting, which would severely impact their liquidity and investor confidence. The opportunity lies in their ability to execute a turnaround plan and regain compliance within the allotted time. It will be crucial to watch how they navigate this period and what steps they take to persuade investors and the NASDAQ that their stock price deserves to be above the critical $1 mark. Alright, that is our decoding of MicroVision's latest filing. What do you think about their current situation? Are they going to be able to get their stock price back up? Let me know your thoughts in the comments below. If you found this breakdown or any of our content helpful, please give this video a thumbs up and subscribe for more regular corporate insights. And don't forget to join us on Discord for more discussions. Thanks for watching, and well, see you in the next one.